Good morning, good afternoon, good evening. Thank you for taking the time to watch this whenever you are, wherever you are. My name is Daniel Frampton and I'm the Investment Director here at Acumen Financial. This is the February 2026 market update for the Zenith portfolios. Today's date is the 4th of March 2026, and the reason we haven't issued this update sooner is of course because of the ongoing and unfolding conflict between the US and Iran. The month of February was excellent in terms of portfolio returns in all 5 portfolios under the Zenith umbrella. However, if we'd issued this update and not referenced the unfolding conflict, even though it technically only started in March, this would have been a little bit confusing. So what we've done is sat back and we've monitored the situation. We wanted to see how this would impact global markets and how it would impact the portfolios before issuing this market update. So this video will cover the performance for Zenith in February, and then it will also address some of the things that are going on between the US and Iran and its wider impact. Starting with the month of February and the performance delivered by the portfolios. To refresh, there are 5 underlying portfolios matching risk profiles. 1 out of 5 being the most cautious, with the equivalent portfolio name being cautious. 2 out of 5 being named income, 3 out of 5 being named balanced, 4 out of 5 being named growth, and 5 out of 5 being named global capital. For the month of February, the cautious portfolio delivered 2.59% in returns, and the global capital portfolio delivered 3.74%. The other portfolios within the risk spectrum delivered positive returns in between these two numbers, with the risk profile dictating where on the spectrum they sat. All 5 portfolios behaved exactly as you would expect them to do, with the higher risk portfolios delivering the greatest return and the lowest risk portfolios delivering a lesser return. In all instances, the portfolios behaved as you would want. Those lower risk portfolios may have delivered a lesser return, but they did so in a smoother manner. This is evident when we look back over the long term as well. The Zenith portfolios for a 12-month period have delivered 7.72% for a cautious portfolio and 15.35% for a global capital or 5 out of 5 portfolio. So there is a large difference in returns over a 12-month period. However, there is also a substantial difference to the volatility along the way. And that is exactly why we have 5 different risk profiles, because different clients have a different tolerance to risk, and an appropriate portfolio is matched according to this risk tolerance. Sometimes positive returns and returns for the sake of returns isn't the only thing to consider. The journey is also really important because every person is an individual and their tolerance of risk is very specific and personal to them. An excellent example of this is when an event like the US and Iran conflict occurs. How does an individual feel about their investment portfolio? Well, some people won't feel very much, and they'll be happy to ignore, forget, and trust that it'll do its thing over the long term. Whilst others perhaps would be more concerned. Those that would be more concerned would be much more likely to pick a portfolio that sits lower down on the risk spectrum. And this is why it's important to have offerings that fit everyone. Fundamentally, when it does come to the US-Iran conflict, this is something that's been bubbling away for a long time. Arguably for decades. Ironically, there's lots of clips of Donald Trump referencing Barack Obama and Joe Biden's poor handling of the diplomatic relationship between the US and Iran and how it may lead to conflict. Where that becomes ironic is it's then Donald Trump that's actually started it in the end. I don't want to get too bogged down in the situation in Iran from a geopolitical or moral standpoint. The likelihood is that global markets won't react too negatively over the long term to its leadership and dictatorship structure being removed. We can only hope that this is done with minimal collateral damage and a long-term positive humanitarian outcome. There is a really great phrase in investment markets. Over the short term, investment markets are a voting machine, and over the long term, they're a weighing machine. Another way to think about this is it all comes out in the wash. So what do we mean? Well, fundamentally, long-term investors, like everybody invested in the Zenith portfolios, should be thinking about profitability of the underlying companies over the next 10 to 20 years. What's happening in Iran right now isn't particularly relevant to changing the long-term profitability of companies, and therefore it shouldn't really upset things too much. However, the way in which global capital markets operate is there is essentially a large amount of market participants buying and selling the underlying investments all the time. Many of this daily trading that goes on is done by people that are looking to make short-term speculative plays, moving their money out of assets that are perhaps falling or stagnant in value into ones that in the short term are rising. An example of this may be selling stocks to buy oil, because obviously when you have conflict in the Middle East, one of the locations whereby a lot of oil is produced, oil prices increase due to uncertainty and supply constraints. What you may then see is that people sell stocks and then buy oil in an attempt to make a short-term profit. What this will then do is exacerbate the fact that stock prices may fall in the short term and that oil prices may rise. And ultimately, this is referred to in many cases as market noise. It's effectively short-term players making short-term decisions that don't really affect long-term investors, providing long-term investors stay invested. And one of the reasons that this hasn't really had the sizable impact that a lot of people may have originally thought is because it's exactly that. Ultimately, removing the Iranian regime as a threat and doing so in a way that doesn't drag NATO or Western countries into a long-term protracted war in the Middle East can only really be a positive thing for Western markets. In the short term, we're seeing a spike in oil prices. This has a number of knock-on effects and may impact profitability of companies in the next 12 to 18 months. But over the next 20 years, the likelihood is that removing a sizable threat to the West is probably a net positive thing. As a result, the Zenith portfolios as a whole have only pulled back around 1.5% in the last few days. Almost all 5 portfolios have therefore delivered a return from the 1st of February to the 4th of March of almost exactly 1.5%. So whilst the global capital portfolio had been returning 3.7%, it's now pulled back to around 1.5%. And the cautious portfolio had delivered a return of 2.59%. It now too has pulled back to 1.5%. So the cautious portfolio, as intended, has fallen less than the global capital portfolio, but funnily enough, they've all ended up coincidentally around the same place in the end. A phrase that I used around 12 months ago when Donald Trump announced the reciprocal tariffs and markets pulled back substantially was, if you are in doubt, zoom out. And what we mean by this is that rather than focusing on the here and now with all of the uncertainty and concerns that the news and media outlets present to you, we want to take a step back and think about the long term. It's really easy to feel that what's happening in this moment is the most important thing that's happened in a long time. I haven't had the longest career in the world. However, I've been around long enough to know that there is always something that you could be concerned about when it comes to investment markets. There is always something or someone or an event creating uncertainty. Ultimately, we need to trust that one thing will be correct over the long term, and that's that businesses will continue to offer goods and services at a rate and with the motivation to become more profitable. If that's correct, then stock prices will rise. Over the last 120 years, the only thing that stock market valuations are 100% correlated with is the underlying earnings of the companies. When you're investing in the Zenith portfolios, you're investing in tens of thousands of underlying securities. There is a lot of eggs and a lot of baskets, so you can rest assured that you've got that diversification that you need to deliver good long-term return potential at your appropriate level of risk. I do hope that this video has provided positivity and reassurance at a time that does feel relatively uncertain. But if you do have any additional questions and you would like any help from either myself, Acumen, or the Zenith team, please feel free to reach out. Thank you very much for taking the time to watch this video, and I look forward to seeing you in a future one. Bye for now.